Here on the Transparent FX Academy, every day I share my educational market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the market. So without further ado, let's jump straight to the charts and see where we can be looking for the next potential opportunity. In today's video, I want to speak about AUDJPY. Now, why do I want to speak about AUDJPY? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is providing a complete multi-time frame top-down analysis, starting from the higher time frames, going down then on the lower time frames. We will also check what we have from a COT perspective. So commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see here is that the market is currently testing a quite strong area of previous monthly resistance, which now that the market has broken it to the upside, is turned support here. And as we are testing previous resistance turn support, we can expect the market to get rejected to the upside. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And what we can see is that the market has just retraced exactly to the 0.618 of the Fibonacci taken on this monthly impulse, which is a quite strong support and demand area, considering that this clearly lining up with this previous resistance turn support. So from this zone, there is a quite high probability that we will see a potential rejection to the upside. Going down on the weekly time frame, what we can see is that we have just completed this impulse correction and impulse pattern to the downside, which is the natural movement of most of the markets, actually all markets. And after such a move, you expect another correction before then seeing the continuation to the downside, which is by definition how a trend should work, a series of lower lows and lower highs. At this point, we need a new lower high, which means that at least we expect a short-term correction based on the weekly time frame. But we have seen on the monthly that we can even expect a long-term rejection. Just a quick thing, make sure that you like, subscribe, and also let me know in the comments the topic for the next video. Going down on the daily time frame, what we can see is that the market has just printed this overextended M pattern. Now, in general, after the creation of an overextended M pattern, you want to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the daily impulse. Now, in this case, the daily impulse is from this high to this low, which means that in a situation like this, we expect the market to correct at least to this 0.32 of the Fibonacci taken on the daily impulse. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing, we can see how lately net positions have been dropping. So overall, the AUD is clearly weak, and we have seen that reflected in the price action. But at the same time, the JPY is getting even weaker, reaching minus 63K net positions, which means that since we are clearly overextended to the downside, we are testing strong support on the monthly, and the JPY is clearly weak, and we have this overextended M pattern. A move to the 0.32 of the Fibonacci taken on this daily impulse seems the most probable outcome. So how we will be approaching a potential short-term longing opportunity here on AUDJPY with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So with students, we will be monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point, we will be adding AUDJPY to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to retrace at least to the 0.382 of the Fibonacci taken on this daily impulse. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade them with me every day. I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also can ask me questions every single day and get the answer the same day in the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.